Amazon, the world's largest online retailer and the leading cloud service provider, which reported its earnings for the previous quarter, and its results have excited many investors. The stock is up about 24% after the September earning reports, a significant jump for a multi-trillion-dollar company, translating to tens of billions of dollars in value creation. In this video, I'll break down Amazon's latest quarterly performance and explain why it might be a compelling addition to your investment portfolio, especially if you're starting out. So stick around for the next couple of minutes as we share some key insights. Let's dive into Amazon's third quarter results. Revenue was up 11% to $159 billion, exceeding Wall Street estimates and management's guidance. Earnings per share, EPS, grew by 52%, which outperformed market expectations. Operating income, management has guided for $13.3 billion but reported $17.4 billion, a massive beat. Gross margins expanded by 140 basis points to 49% in the third quarter of this financial year, which is a big deal at Amazon's current business scale. Both operating and net margins saw meaningful growth. However, there's an interesting point here. While net income grew, free cash flow was down. Here's why. Operating cash flow was at $26 billion, up 22% year over year. Capital expenditures were at $23 billion, up 81%. This may raise concerns, but Amazon has a history of strategic long-term capital investments. For example, it previously spent heavily on fulfillment centers, which paid off significantly. But now, much of this investment is focused on AWS infrastructure to support generative AI growth, which the company says is expanding at triple-digit rates. Amazon operates multiple business units, and here's how they have performed. The online stores have revenue of $61.4 billion, which is up by 7.2%, an acceleration from 4.6% growth in the previous quarter. The third-party seller services contributed revenue of $37.9 billion, up 10%, reflecting strong growth in this higher-margin segment. Advertising made a revenue of $14.3 billion, up 19%, making it a highly profitable growth driver. Amazon Web Services, where major investments are happening, its revenue growth re-accelerated to 19%, with expanding operating margins, cementing AWS as the company's primary profit engine. So why Amazon Web Services matter? AWS contributed $10.4 billion in operating income this quarter, accounting for more than 60% of Amazon's total operating income. Its growth is fueled by the increasing demand for generative AI and cloud services. This segment remains the cornerstone of Amazon's profitability. Coming on to future guidance on Amazon business. For Q4, Amazon projects operating income of $18 billion, a 41% year-over-year increase. However, management has hinted at continued high capital expenditures in 2025. For long-term investors, this reinforces the spend now, profit later strategy, which has worked well for Amazon historically. Key growth drivers to watch for future growth potential are Amazon Web Services, AWS, advertising, and third-party seller services. Amazon's current valuation looks attractive. Operating cash flow, trading at 19 times the operating cash flow versus a 10-year average of 26 multiple, a 40% discount. Furthermore, forward operating cash flow is trading at 16 multiple, below its historical average of 19x, suggesting a 20% margin of safety. Amazon's moat continues to expand, and its long-term growth thesis remains intact. For investors, the current valuation offers a compelling opportunity to consider adding this tech giant to your portfolio. If you'd like to dive deeper into investing strategies, where we provide close insights to every stock and major companies. So, don't forget to like, comment, and subscribe for more financial insights. See you next time.